Welcome to this next installment of the technical analysis course. My name is Samuel Morton, and in this video I will be demonstrating dynamic support and resistance. As in all the videos, I've used the same chart, the pound against the dollar. This is a 4-hourly chart, and we've looked at May, June, July of 2013 to date. In our last video we looked at moving averages and how having two moving averages on the screen can provide a moving average cross which can signal future price movement. So we have a cross here and price declines. This is followed by a cross here and price appreciates. In past videos we've also looked at support and resistance, horizontal support and resistance, meaning areas in the market that when price reaches it changes direction. So we have price come on the upside, on an uptrend, it reaches this resistance area and price changes direction and goes on the downtrend. As mentioned, we're now going to look at dynamic support and resistance, which in a way is putting the principles of support and resistance and moving averages together. On my screen I have two moving averages, a simple moving average of 25, which is the blue moving average, and a simple moving average of 50, which is the green moving average. Now the way dynamic support and resistance works is a moving average acts as a support or resistance area in the market. So when price hits the moving average, the dynamic support or resistance can push price the other way. So a moving average with a bullish bias can act as support for price, and a moving average with a bearish bias can act as resistance. And we'll look at some examples of this now. We have this uptrend that we've looked at a number of times in this course. Price is uptrending. We have this step in motion in the market. Now this area is a great example of dynamic support and resistance, and in this case dynamic support. Price pushes, it pulls back, and when it reaches this moving average, the moving average acts as support, it rejects price, and price bounces off or is pushed away. We have a similar thing happen again here. Price pulls back after a push, we reach the moving average and price bounces and goes for another push. In a sense, this moving average can mark the end of a pullback and the start of a push. Let's look at the downtrend in June and July. Price is downtrending, we have a push, a pullback, a push, a pullback. Once again we reach the moving average of 25, price is rejected. This time the moving average acts as a resistance, a dynamic resistance area in the market. The pullback ends and we go for another push. Price then pulls back. You'll notice that we close Above the 25 moving average, price is not rejected, but is rejected against the 50 moving average. Once again, a moving average is acting as dynamic resistance. Price reaches this dynamic resistance and is pushed the other way. We have the end of a pullback and start of a push. Price uptrends here. We have a cross and a rejection of both moving averages. Price then pushes and is rejected again. The moving average is acting as support. Price pushes and is rejected again, and finally goes on the upside. Here are some more examples of dynamic support. Price pushes, pulls back, and we have a rejection of both moving averages, and price goes on the upside. Price pulls back, is rejected on the 50 moving average, and goes for another push. Now obviously, with all trading principles, they're not 100% accurate. There are times when dynamic support and resistance is broken, just like when horizontal support and resistance is broken. We cannot rely on it 100% of the time. You'll notice at the end of this downtrend, the moving average is broken here and again here. And there are other areas on this graph where price breaks through dynamic support and resistance. When should we trade dynamic support and resistance? I think the best time to trade dynamic support and resistance is when price is trending and we have a pullback against a moving average and there's a signal of a pin bar or an engulfing candle on or near the moving average. This increases the chance of trading dynamic support and resistance profitably. If we had a downtrend, we would wait for the pullback against the moving average and wait for a pin bar or engulfing candle as our signal that the resistance is going to hold. If we look at this uptrend here, price pushes, pulls back, pushes, pulls back, pushes. Against this pullback, we have our engulfing candle. On our pullback against the dynamic support. Price then goes for another push. Other strong examples of this can be found here. Price pushes on the upside, we have a cross, a moving average cross, meaning price could uptrend. Price pulls back, and against this moving average we get a pin bar. This is followed by an engulfing candle. There are two strong signals here that this dynamic support could hold as support. Price then strongly goes on the upside. Further along this trend, we have similar signals. Price is uptrending. We have a pullback. The first moving average of 25 is broken, but when we reach the second moving average, we have a pin bar and an engulfing candle. Soon after, price then goes for another push. Thank you so much for watching.